Welcome to our weekly report. This is Ramesh Sigamani from Bravisa Temple Tree. The long-awaited corrections for the market have finally set in, following multiple negative news that reached the markets in the last week. The top three shakers for the market were: the first one, Fed begins unwinding. US markets have begun to tighten their purse strings, thereby making their market more attractive for institutional investors. This was an anticipated move which will impact foreign money moving out of our country, whereas India is no more a FII dependent market. Domestic inflows have been fairly very high than FII flows, and it will take care of any outflow gaps that is going to be created in the short term. The second news for this week following the Fed news was that 50,000 crores of government stimulus. Government has decided to spend 50,000 crores more than the budgeted expenses for this year. This has caused concern in the market that more expenses will create additional deficit and impact the GDP. Whereas it is actually a good one because this will begin the growth process that was long awaited and create a lot of opportunities. While for the present this news was received in a bad mood. And finally, the third point, North Korea H-bomb threat. As the news that North Korea is testing nuclear weapon in the Pacific Ocean reached the market, sell buttons got triggered. This was a long-awaited uncertainty which became a reality this week. As we have been saying for the past few weeks that India market is very strong and it would require even more stronger negative news flow to break the current rally. The amount of negative news flows that the market had this week ensured that it breaks the liquidity rally in the market. So, this being the uncertainty in the market, how is our portfolio doing? After having had very good gains in the month of August, for the month of September, we have made 1.37% gains as against the 0.49% gains that Sensex had made in the same period. The present correction in the market is likely to continue for some more time, while this is a healthy correction where it gives opportunity for weaker stocks to move out of the portfolios and give space for new entrants. As we can see from this chart that after every weakness the markets have moved higher and higher. Hence there is no need to panic as the long-term picture for India is really very strong. Now coming to the useful news for this week, earning from your idle money. The idle money that lies in your account before meeting their regular expenses like home loan EMIs, grocery bills, utility bills, school fees, as well as your SIPs have been earning a small interest. The interest amount was so small that did not get our attention, and now this has become even smaller. What was once a 5 to 6% interest rate has now gone to 3.5 to 4%. This idle money in the savings account can get 6.5% returns if it is used through liquid mutual funds. For example, if a person has a 50,000 rupees emergency cash in his account and has been earning 1 lakh of salaries per month, which he spends over the course of the month, the money that is going to stay in his savings account before it is going to get spent can earn him 6,000 rupees in a year. How this works? The idle money and the salary amount that is there in your savings account gets moved to a liquid mutual fund through a mobile app. The daily balances in the liquid fund keeps growing at 6.5% per annum. And when there is a requirement for cash to meet some of your expenses, you can draw from your liquid fund the required amount to your bank account. And the money reaches your bank in 30 seconds. And this works 24/7, 365 days a year. The biggest advantage of this option is the track record that your account is getting generated. We get the analysis of how much of the liquid cash is being actively used and how much is idle. From this idle money, a small portion of it can be continuously moved to a better asset class which gives higher returns, thereby helping you save more and more without any effort from your side. So make use of this greatest advantage of growing money and give your money the best of growth it can have. To sum it up, Fed unwinding, government stimulus, and North Korea bomb threat brings correction into the market. While fundamentally nothing has changed. So be invested to reap the biggest gains that Indian markets are going to provide in the months and years to come. Thank you. This is Ramesh Sigamani from Bravisa Temple Tree signing off. Have a great day.